Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to do something a little bit different. The reason being is we have the FOMC interest rate decision this evening, so I don't really want to be entering many positions around that type of news. The reason being is because it's very volatile. Anything could happen. It only takes one word out of the Federal Reserve to completely change a market sentiment. So I don't really want to be involved in anything right now. So instead I thought I could do something that may help you in your trading or may help you to become a better trader. And that is essentially my top trend trading strategy, and essentially how do I set myself up for the day. And we're going to take a recent example that we took on Euro US dollar, and then kind of go from there. So how do I set up for the day? Now typically what I look for is trended environments. I look for where the market is likely to go to and from on higher time frames. So I'll look at the weekly, for instance, and I'll usually map out some key areas of support and resistance. Like for instance, this area up in here, we saw that there was this recent high, and I typically look at recent swing highs and lows as my support and resistance points. So you can see down here now we're coming into this sort of zone on our weekly time frame. So that's an area where I think the market may start to find some potential support. It's not definite, it's just building a bigger picture. Now what we noticed at the time was the market was actually rejecting these recent swing highs, and we produced this bearish candle, and that to me was the opportunity to look at the strength and weakness tables, which also suggested that the euro was at an extreme at this point, showing us that there's a potential reversal to come on Euro US dollar. And this is where we dove into the lower time frame and looked for a position on the daily time frame, which we took, and we actually took an 8-hour position up here, as well as the daily position in here. So but it all stems from that weekly time frame, and the best way I can show you is by showing you what we've done in the past. If you go through the Telegram channel, you can see these trades that were posted back on these dates, so around about the 16th of January and around about the 6th of January as well, where we posted these updates. So what I really want to show you next is what do I do once I've found that sort of support and resistance level. So found my two support and resistance points. With this big resistance up in here with the false breakout, and we're now entering this support point down in here. So the next step for me is watching the daily price action. Okay, what is the daily price action saying to me? And at this moment in time where we were looking for short positions, the market was very bearish. Okay, we saw this nice candlestick here, and this is where the market actually finished on that week. Let's just double check that was the actual one. Yes, it was. There you go. So it jumps from the 3rd to the 6th. And you can see it was very bearish at that point. So what I do then is I expect that bearishness to continue, okay? Because when the market's making lower closes, I expect the market to continue to do that until it gives me a reason not to, okay? So we dove into the actual 8-hour time frame, and we took an early position up in here on the first higher low. Okay, so we saw that the market made this doji candle, inside bearish candle as well. We looked to short it underneath that low, and we placed our stops above these highs just in here. Now that's a bit more of a reversal strategy, but if we went down into the time frames, you'd see that there's some potential moves on the lower time frame when it comes to that area. So what I typically do, so we go back a little bit, let's just take this out. Once I get the establishment of where I want to go, I'll go into lower time frames. I dive in, I find an area of interest where I could potentially look for those short positions the next week. Okay, so you can see here that the next week we actually opened on the 6th and we actually moved higher. Okay, we moved higher, and we made new higher highs. Now that goes against what our analysis was. The weekly was saying it wanted to be short. Okay, so I'm watching what happens here. I'm seeing, does the market actually follow in line with my strategy? So just to explain the strategy that I use, it's basically a 50 EMA, which is the red line, okay, on the screens, and I use a 200 EMA, which is the black line running through, and then I use an RSI 7 period, okay, and I look for overbought, oversold conditions depending on which way the market's going. Okay, so within that day, obviously, we closed higher, which goes against our weekly analysis, but I like to stick to the higher time frame. I always see where that weekly time frame's going, okay? Then what happened? The market dropped through and pulled back, and it actually gave us a signal here. So you can see that the market went into an overbought condition. We hit that 50 moving average. We produced a bearish candlestick. This was the first opportunity to get short on Euro US dollar, and you can see the market dropped significantly after that point. Okay, and then it's all about monitoring the daily time frame. Okay, once you're in a position, I want to go back and look at the daily time frame. Okay, so what I'm going to do is just stick an arrow in there. We found our position. Let's watch the daily time frame. Where could this market go to? Why do we expect it to go there, and what could happen next? So we actually pointed out the position could start to stall around this point. Reason being, there was resistance, support, breakthrough, resistance, and then the market fell through again. And we also watched the daily price action. Once we saw the daily price action was forming this doji bullish candle, that to me suggests that the market could start to retrace. Okay, where do we expect to retrace to? Well, now this is where we start to bring in our minor support and resistance levels. Okay, so you can see here, this line just there was our previous area where the market found some support. Okay, the market broke up, closed there, bullish move. Then we had our opportunity to get short, which was in here. Where does it come to? Previous minor support level, and then retracement. Where do we expect the retracement to end? At this level here. We actually took a end of day short position on this candlestick here, just in case the market didn't actually pull back up into that resistance, okay, which didn't trigger. The market then broke higher, and then we had our second opportunity. So once I see this daily signal here, okay, not only can we short it on an end of day position, but we can look for possibilities of the market moving lower once again. Again, looking at those minor support and resistance levels, which we've already have in here, which is this low through there. Market breaks through that. You can see it retests it and then drops down into this bigger support level on the weekly time frame. So what I'd do at this point, and what we did do, is we dove lower again. We go into that hourly time frame. You could choose the hourly or the 4 hour. Hourly for me works best when you're looking at the daily time frame and you're looking for the breakdown there. If you want to look at a higher time frame, like if you were just looking to trade maybe the monthly, I'd be looking at the 4 hour, and we can go take a look at an example of that next. But essentially what I do from here then is wait for the strategy setup. I know where I want to be going short in at. I know why I want to be going short this market, and now it's just looking for those strategy, okay, signals. So you can see we get the crossover there, we get the pullback in here. Great that it comes off a resistance after the market broke through. What do we see? Overbought condition, okay, bearish candle, we go short, okay, and most recently we had one just in here, and look what happened to the market, it went short. Now we're at the big support level, so you don't really want to be shorting any longer now, because the market could find that longer term support, especially if the daily gives us a bullish candle. Then we could expect a potential pullback there, which is another reason why I was looking for that Euro Swiss to move higher, because Euro's at this big supporting level, okay. But essentially that's all I look for. I look for opportunities in line with that, and again you could dive in to that 30-minute time frame and look for other possible shorting opportunities in line with your bias. Okay, so that's all I look for really on a day-to-day basis. And looking at another opportunity, so if I actually go to Kiwi CAD was a good chart to look at a while back. Let's just grab Kiwi CAD. Let's just bring this on the screen. This is a great example for those that want to trade the higher time frames. It's a real clear example. So I'm just going to bring on my template. I'm just going to go to a monthly time frame. Let's just get rid of this. These were saved on a previous template. Okay, so now I'm on that monthly. Now, we were looking for long positions down in here. Okay, reason being, I'm just going to bring it to that low there, was the market found support here in the past. And what else happened was the RSI was in that overbought, oversold condition. And you can look back what happens when the market's in those conditions. So you can see we went oversold, market rallied. We went oversold, market rallied. We went oversold, market rallied. Okay, so when the market came back into this point here, I said to myself, well, there's a possibility, not that it's going to happen, there's a possibility that if we get bullish price action off this level, the market's in an oversold condition. History tells me that the market rallies. Where's it going to rally to? Key support and resistance points. Okay, so there was a support and resistance level, or just resistance level at that point, running through here. Around this sort of area, you can see the market found support, 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 support. Okay, that could be an area where the market finds some resistance. It might not have, currently it is, but it might not have. It could have just blown straight through that and headed towards these highs. But the point is, you're looking at your higher time frame to gain your direction. Okay, now I dive into a 4-hour time frame because I found that the monthly and the 4-hour work pretty well together. Okay, so I'm just going to take the replay off. And show you what happens next. So this is where we see our monthly bullish candle. Okay, you can see here, this is the end of the month. There's our bullish finish. What we notice at that point, or what we get, is the market crosses over on our averages. It pulls back into our averages. The market goes into an oversold condition. We rally. Okay, and you see this one actually keeps going all the way into up, and our next signal really produced is here, which is next to the big resistance level. It rallies, comes back, even gives you a third opportunity, and rallies again. Okay, so that's how I try and keep it very, very simple. I look at those higher time frames, the support and resistance levels, and then I watch for my strategy to come into play. Okay, I hope you enjoyed that video update, something a little bit different. I can't go too in depth with it because I'd need an hour, not 15 minutes. But I hope you enjoyed that video. If you do have any questions, drop them below and I'll get back to you as soon as possible. Thanks for watching, guys. Speak to you soon.